This is our Forex blog for March 22nd, 2011. And like most days, we want to see which currencies are the strongest, which ones are the weakest. Clearly, the dollar has the weakest daily, weekly, and monthly trend. In real time last night, it showed a lot of weakness. And for most of the day, up until about 7, there was a lot of weakness. The pound has a daily, weekly, monthly trend that's up, and around 3:30 it became really strong. If you bring up a pound-dollar chart, you can see coming into 3 o'clock, it was above the hourly moving average. Its last move up was up and had a very slow pullback to the hourly moving average and wasn't able to go below it. Aggressive traders might have got into it here, anticipating the future trend direction, previous trend direction continuing. There wasn't a whole lot of statistical strength on it until it just took off a little bit later in the day. Once it broke above the previous day's high, usually you can get two-wave up when you're trading with the trend. So if you had bought it right here, you draw your fibs somewhere up here near the fib targets, very likely to be the maximum move. And when it's above the upper containment band, you might have looked to get out of your trade here, especially with seeing that divergence right there. Very high probability trade. Strong pound, weak dollar. Now the yen also kind of became weak here at 3 o'clock. The pound yen is also going to be a good opportunity to buy. This one also had trended up the previous day, not quite as much, didn't hit the upper band, pulled back and went underneath the hourly, and when it's underneath the hourly it's more likely to go down. But you had a multi-hour sideways range here. Aggressive traders might have anticipated a breakout of this sideways 2-3 hour range. If you want to be a little bit safer, you'd wait for it to break out above the hourly. And the 50-day moving average is a possible profit target. If it stalled there, you might want to get out of your trade, but it just shot through it, shot through this, and then went sideways up at the previous week's high. Good place to get out of at least half your trade because you don't know it's going to continue. Put your stop underneath the sideways range here. And again, like I said, most of the time, strong trends, when you're buying the strongest pair versus one of the weakest, it's likely to make a two-wave move. And look where it stopped, right at the fib target. You maximized your trade on the second wave up. So you got out of half of it here with about a 50 or 60 pip profit, and you made another 40 pips on the second half, all using the currency meter. The Australian is also showing some strength today. The monthly trend is still down, so it's not as high a probability as buying pound pairs, but strong Australian daily weekly trend is up. The dollar is down. You could sell the Australian dollar. I'm sorry, you can buy the Australian dollar. Notice this one also was kind of chopping around last night. Broke out, went above the hourly moving average. There's a little bit of resistance right here. It goes sideways, you go long right here, and kind of stalls at the first fib target. And just like before, if you have a super strong currency, it's likely to make at least two waves in the direction of the trend if you're trading it with the weekly or monthly trend. And look where it went, right to the fib target. It's very close to the upper containment band, and it didn't really have off the charts momentum. Anything at or above the white line is extreme strength, likely to continue. Any major resistance area like Fibonacci profit target or Fibonacci retracement levels that get hit with almost no strength or weakness are very, or more likely to be the end of the move. The New Zealand also was very strong. In fact, more consistently strong than the Australian. And you could also trade the Australian from 3 to 6 against the yen. Let's take a look at that one first. This one also was hovering right underneath the hourly. Anytime currencies go underneath the hourly and don't continue down, this one kind of went down and then went sideways. When it breaks back above the hourly, it is more likely to reverse trend because usually hourly moving average breaks are the beginning of a new trend, and in this case clearly it went sideways for 4 or 5 hours and then broke out. And again, first wave up, draw your fibs. Fib targets very likely to be the end of the move. Now this one did go slightly past the 1.618 fib target, but also notice when it was up there it had incredible strength. So when it kind of ran out of steam later, you get out of your trade. Let's look at the New Zealand dollar. Strong New Zealand, weak dollar. Just off the charts strong. It was above the hourly, it found support there, found support again here, broke out over yesterday's high. It's always a good entry anytime you see a sideways range right near a resistance area. There was also a monthly pivot level there, weekly pivot level. When it broke that, the next profit target was up here. Kind of meandered up there without a whole lot of statistical strength. I probably would have got a half my trade here, and then just, you know, kind of trailed to stop up. You can see had a lot of momentum here, kind of died down, made a higher high. Good place to get out of your trade.